Hello, guys. So this is the pre-market analysis of 25th of June. It's a sensex expiry day. So see, last 2 days we got a sharp down move because of we have seen SK Hynix and Samsung was dropping almost 12% last day, and it recovered also 11-12% on the next day. So that's the reason why we got panic on Nifty expiry day. So it was nothing to do with our market, especially some news which is coming related to they are going to focus on AI theme, or they are not going to focus on AI theme. They are going to look into the ordinary chips and all those things, those semiconductor sectors. During the rally also we never participated. So during, if there is a collapse also, we won't participate. In fact, I told you it is going to be good for India because entire money is gone into the AI theme. Entire money is gone into, if you see how South Korean market and Taiwan have overtaken India's market capitalization. Such a small country, such a small population, but the entire foreign money is gone to, if you see, into the semiconductor sectors and the AI theme. Especially if you see South Korea, SK Hynix and Samsung. Now they have collapsed on last day on Nifty expiry. So what happened is at that point of time, entire sell-off is there on global sell-off also there. Dow is falling, DAX is falling, Nasdaq is also coming down almost 500-600 points. So we also followed. So when that yesterday's low was broken on Nifty expiry, normally the put sellers will try to cover the position, short covering, and then that actually led the aggressive down move. So it's a panic-driven move. Otherwise, nothing to affect us because of that. And next day we recovered. And if you see the recovery, that's amazing, especially on Banknifty. So what you see now is Banknifty chart. So if you see, the fall started from here. Yesterday, the first candle is completely overtaken this 3 o'clock move. Nifty struggled a little bit at that level, but Bank Nifty have taken it completely in the first candle itself. This 3 o'clock, that bigger dip which came at 3 o'clock, that is taken out, and then it gave a dip to 20 MA. Your buying opportunity. Even Bank Nifty also, in Nifty also, you got a 20 MA buying opportunity somewhere here. But Bank Nifty here itself, you got a dip, you got a buying opportunity and started bouncing. And it is completely taken out yesterday's high from where this bigger crash or the bigger fall has came. Completely taken out here. It is taken out day before yesterday's high also here. It is taken out this high also because this was the double top, right? I would say more than this, the danger point was this. Here was the top. This is a recent swing high, and that is exactly where the sell-off have came. So now what happened? They have strongly and convincingly taken out that level. After that, it gave a retracement to that level itself. So when this high is taken out, right, this is a strong double top. That's from where the entire big move has came. So from here, you got a gap down and a bigger down move. Further from here, you got a gap down kind of setup and a bigger down move. That is because of the panic. And when that is broken, coming to that level, exactly what they will do, they will act as a support, right? And there is a 20 MA also. So that is another 20 MA trade that you could have got yesterday on Bank Nifty. Now, since this is the last week of the month, you can trade Bank Nifty, right? So there is no need to trade Nifty. You can trade Bank Nifty. You could have done it easily. And if you look at Nifty also, though just that Nifty have not yet crossed this high, but I'm expecting, today they will do that because we will be getting an opening of around 70 point up. So this will be opening around 24,070 level, or you are going to get an opening at yesterday's high. Just that it need to stay, it need to hold that level. If that happens, we'll be seeing 24,120, and I won't be surprised if it moves to 24,200 also. That is this high. So see, Bank Nifty have convincingly taken out this high, this day high. That is what you can see here, this high, right? Bank Nifty have taken out that. When Nifty also made that high, this is a recent swing high, which is close to 24,200. So during the peace agreement and all that we were talking about, we were looking for 24,200 move. We got it. But from there, you got the gap down and dip also. And a kind of double top, not exactly like the way in Bank Nifty, but crash have came. Now, Bank Nifty have covered everything. Yesterday's high is taken out. This day before high is taken out. The double top is also taken out. And convincingly staying above that. Now we are going to get a gap up also. So it's not a case of gap down, right? Then we need to think about, possibility of a little bit more down move. So for me, as of now, it's buy on dips. Okay. So the market is, currently buy on dips. But again, let me tell you guys, if you look at US markets yesterday, US markets was slightly jittery. That is again because of this, there is something related to, Micron have already, you see, rallied almost 758, 9 times in the last 1 year. So some investors may be considering that the valuation, it's stretched and it's at overvalued and it's at a peak. So that could be one of the reason. And similar pattern is what we have seen, you know, uh, in Samsung also, in macro, SK Hynix also. But next day, you got a recovery in Samsung, right? It fell around 12%, it recovered also 10%. SK Hynix also fell 11, 12%, it recovered also. So the recovery in SK Hynix was also supported by the reports that the company is planning a NASDAQ listing as well. So they are going to list in NASDAQ as well. So, yesterday, this Micron's earnings announcement, it actually gained 16% in the post-market trading, and this Qualcomm also gained 13%. So Nasdaq futures are now trading strongly higher. US futures are again indicating positive momentum. Gift Nifty is also looking very positive. So in all ways, I'm looking for a gap up opening of 60. So closed at. So 60 to 80 point gap up we should be getting. So around, if you consider 70 point up, that will be around this, right? No, not here, yesterday's high. So you'll be getting at yesterday's high. Now there is a high chance that it will touch at least day before yesterday's high. That is where this will be taken out. There is a high possibility that if the momentum continues, this will be taken out. Oh, sorry, you're not seeing the screen, but my point is, yeah, I've already shown the screen before. So it is opening 70 point gap up. So the possibility, and Asian markets, if you see Asian markets actually mixed, some markets are trading higher and some others are trading lower. So Gift Nifty, if you see, that is now telling you'll be getting 70, 80 point gap up, but be very careful with previous day high. That's from where the sell-off have came. Now remember, when that sell-off came, on that day, FIAs were positive. DIAs were also positive. So we are not much worried about FIAs or DIAs. That day, it was clearly retailers were selling. Retailers sold because of the panic. Now crude also, if you look at it, it's a very good sign again. It's slightly below 76 Brent, and WTI is around 72. Right. So if this current trend is continuing, now Strait of Hormuz issues also almost over, and next 60 days, it will be like very normal. And also, Iran is allowed to export oil to other countries without any sanction, which is good for Iran, which is good for other countries, which is very much good for India. So considering all these, I'm expecting that crude oil price can even come down the level which was at before the war. Even below that it can come, because at that time Iran was not contributing to the world supply. Actually, yes, Iran was selling, but Iran was selling to rerouting, and that itself will increase the cost, and then it is selling to China, it is selling to Russia and India. So a lot of, to avoid the sanction, you need a lot of other measures, right? So now that is not the case. Openly you can sell. So normally the price should come down even before the war level. So that is again going to be very good positive. So it's highly positive for the economy. And you see, that is one thing. Again, if you look at gold, gold also corrected sharply during geopolitical tensions. When uncertainty is high, the safe haven asset is gold. So people move to gold. At one point, we have seen 5,600. It was trading at around, per ounce, it's around 5,600. Now it is trading close to 4,000. So from 5,600, it corrected. I've never seen such kind of correction in gold, at least in the last 10 years. Okay, I don't think that this kind of correction we have seen anytime near soon. So it's almost 33% correction, almost 1/3 correction we are seeing, not in a stock, not in a crypto, guys. I am talking about an instrument which is considered a safe haven, which should never do like this, right? It's now at 4,000. It can still see now gone. If you consider India, there is some tax, because when you in physical gold, if I'm talking about, and if you're importing, then there is an import tax which is actually increased because rupee have depreciated, crude oil prices anyway higher, current account deficit is increasing, and Modi government prime minister also came and told that you should not buy gold at this point of time. There is a warning, because when you're buying gold, you have to import, and that is adding pressure on the rupee again, because forex is outgoing, dollar demand is increasing. All that were adding pressure to rupee. So now when the price is coming down and everything is getting normal, crude is also normal, current account deficit is coming back to normal, and rupee is also getting strengthened, the increased import duty the government may reduce. If that happens, the gold price can further crash in India. So if you are someone who's looking to buy physical gold, there is a possibility that it will come down further. Okay, so that is something which I want to discuss. So crude oil price is coming down, which is very good. Oil price is also, the gold price is also correcting, which is also good. See, inflation expectation is there, but now since things are getting normal, that expectation is lowered because crude prices, everything is coming down. But we have another threat, monsoon. That's something which we need to discuss later, right? So, and banking sector is also looking very strong. All these can take the market higher. Now, if you ask me what is the resistance, I would say 24,200 is the major resistance, like the way it was day before yesterday, the same level, 24,200, and I think 24,000 should be a strong support. Market closed at 24,000, where you have 5-minute 200 EMA is also there. So I look for a buying opportunity at 24,000. Cool. So 24,000, I look for. If it comes, it is opening around 2470. If it comes to 24,000, I'll be looking for a buying opportunity. So see, these are the things that I want to discuss. ADR performance also, if you see, almost all positive. HDFC, ICICI, Infosys all positive. Banks are looking very strong. Despite that correction, it recovered completely. So all these are, US futures are indicating strength. Nasdaq futures trading strongly positive. Qualcomm is up by 13%. Micron is up by 16%. That's the post-market trading I'm talking about because of the good result. Gold is correcting sharply. Crude is also correcting sharply. ADRs are positive. Infosys, HDFC, ICICI, all these are positive. Banks are showing strength. So in all possible ways, unless there is no expiry gain, right, it should be positive. So let's see what is going to happen. So trade responsibly, trade carefully, and trade the levels, not emotions. I told you yesterday in a video that there is no need to have a view also whether it is going to go up or down to trade. Otherwise also you can trade, but if you have a macro view, that way also you can trade. I've discussed one strategy also yesterday, double-sided spread, right? That is a non-directional view. If see, I'm still talking about yesterday, I've uploaded a video where gap filling trade. If gap filling is happening today also, we have a macro view which is on the upside. If the gap is going to be filled by coming to 24,000, that's your opportunity. Grab that opportunity and take a trade. That's it. One trade, one quality trader day, that's enough. And if you would like to learn this in the live market, we have the live market mentoring program where I trade and I teach live, sitting with you, and that's the real learning. So if you're interested, you can talk to our team, given the number and the details, and join us. I see you there. See you. Thank you.